Hello traders, this is John Kicklighter, Chief Strategist for DailyFX.com. This past weekend I made a video that was focused on separating trades that were more temptation than they were good mechanical trade setups. Now we often get into situations where there's a long string of no opportunity, where we have a dearth of good technical and fundamental setups, or we might be trying to trade back from a loss. But we have to be able to, when things get exciting, be able to establish that we have a good opportunity on our hands and we're not just trying to seek out the next trade. Now this is something that I think we need to put into practice today in today's strategy video, because I want to look at these big risk moves that we've had, particularly in US equities and from a couple of these yen crosses, because they scream opportunity, but we want to make sure that we are thinking in terms of probability and proper trade management. So taking a look at the market activity that we had, it was easy to see the interest that traders were putting into this. Now, this is a 2-hour chart of the S&P 500. Now, you can see we had that big build-up into the Friday reaction to non-farm payrolls. That was itself a very big decline. But the decline would stop at this meaningful trend line here, this trend line support. The opportunity came again, however, this past session when we had another big spill-off. Now, what was driving this particular move? Well, there were a couple indicators on the docket, but they're not necessarily that market moving. That in itself is a first level of concern. What was driving these markets? Now, risk aversion itself is a very influential theme, and when it does get moving, its momentum is extremely difficult to stop, and it does trip up a lot of stops and deleveraging effort. But not seeing the catalyst is something of a concern. All right, that's one thing that should put us on guard. Now, we see this big decline, we can see the momentum behind it, and the immediate interest is in establishing what level of follow-through, what level of conviction is behind this move. All right, well, we look at the 2-hour, you can see the level of volatility. It gets really interesting. It looks really interesting. Now, this is one pitfall of trading. We oftentimes can, when we're seeking out some kind of trade, some kind of activity, turn down the dial on the frequency. We start to look at shorter and shorter and shorter time frame charts. When we start to see something like this, yes, this is a big move. And a big move, particularly of this magnitude on a short time frame, suggests that we might have something more substantial on our hands than we might possibly have. So the first thing that I would recommend when you start to see big moves like this is to move the time frame up to a medium-term time frame. Now for me, a medium-term time frame is the daily. Actually, that's my dominant time frame. Now when we see the S&P 500 on this level, things get a little bit more interesting. All right, you can see that yes, we are starting to take out that trend line that we saw earlier, but there's still a level of lows that we've been testing or milking since February. All right, and we still maybe not have fully cleared these levels. This level of conviction is also something that we start looking at when we look at other equity indexes. This is the S&P 500. You see a similar circumstance in the Dow Jones Industrial Average. Definitely a big move, but is it necessarily follow-through potential? Is this confirmed? Would you call this confirmed? That's something you have to ask yourself. We look at Asia equities. Nikkei 225. I've been watching this one really close. Trend line break here, wedge break. All right, that certainly does carry a very big technical move, but we also have those level of lows down here. All right, it's difficult when you have a very shallow slope trend line like this. Is it necessarily the exact break of a trend line that actually instigates a change in tack, a change in momentum? Or is it when we actually clear these range of lows? That's always a big question that we have to ask ourselves, and it's not necessarily easy to answer when we're looking at technicals. The European markets, DAX, yes, definitely downside day, and it certainly does carry the air of a big follow-through. But the technical levels on each of these, have each of these indexes cleared their respective support levels? Are they really instigating a longer-term bear trend? Well, looking back at the S&P 500, I wouldn't be so sure. All right, a big bear trend, a move that would really generate strong momentum to the downside, would probably come below 1800. That's the bottom of this rising channel. All right, and even further back, you might want to clear the bottom of this really structural trend line. That's way down there, though. So there's plenty of trade opportunity between this trend line and this trend line. But we still haven't broken that 1800 level. All right, we're not really close to it. We can also have opportunity between this trend line and 1800, but that is significantly smaller. So we immediately start to break down the opportunity for follow through, and we start to realize or recognize the situation as a really strong lack of follow through and against a very big bull trend in a structural way. All right. Now, I'm not saying this isn't a turn in risk. What I'm saying is we have to play by the rules of probability, and we have to see at what level, at what probability interval are we saying this is confident, and I'm confident enough to take a trade here. So we take a look at a couple other things. All right. Volatility on the day certainly jumped. You can see here this is the comparison of volatility for different markets, equities, FX, gold, treasuries, and emerging markets. All right, it really was only equities that had that really tremendous jump to the upside. The other markets didn't really suffer the same kind of uncertainty. You can see that more clearly here in the FX versus equities volatility measures. The FX version actually has hit a new multi-year low. Furthermore, and this is why I keep this updated, the risk depth chart. What markets were moving in alignment with risk-on, risk-off kind of themes. All right, so we're moving away just from equities. We're looking really at that fundamental theme. We have here the equity indexes, emerging markets, the yen crosses. They all actually did respond pretty wholeheartedly to that kind of risk theme. However, a lack of volatility measures following up a certain disparity in the dollar's performance as a safe haven, pound dollar not reacting as a risk trend currency, euro dollar not acting in that manner, and certainly not treasuries showing that kind of pure liquidity demand. This is a measured move so far in risk trends. Now, when we look at it in those terms, then we have to start looking in the FX world as well. Maybe this isn't a full-scale risk aversion. It has great opportunity to be so. So if we get that next phase to the downside, maybe we get to something more interesting. But in the meantime, we should show a little bit more hesitation on a risk-on, risk-off move in the FX world. The yen crosses in particular are very, very appealing to me. I think that some of these crosses look particularly attractive, especially the dollar yen, which we've seen a big march down from 104 down to 101.35 that we see now. Once again, a 2-hour chart. But remember, let's move it up in time frame. Let's look at it in a medium-term time frame. We've taken out the floor of this rising channel, but the real trend line, the more substantial trend line, which goes all the way back to January 2013, actually is still below us, about 101. All right, so we have to clear 101 before we get follow through. Now, if you haven't seen it already, I've made a couple videos, and both trading and strategy videos that discuss the yen crosses and why the dollar yen is probably not the best currency pair on playing move to the downside if it's related to risk trends. Well, in very brief synopses, a downside dollar yen is going to be somewhat problematic because the heavier the risk aversion gets, yes, the yen crosses will decline in unison, but at the same time you get heavy enough risk aversion, then the dollar starts to play the role of a safe haven. So then the yen is rising, but then also the dollar is rising elsewhere. That offers a conflicted view for something like the dollar yen. Now, in these kind of circumstances where risk aversion has kicked in, but the dollar is still not playing its risk-off role, its safe haven role, this provides an ideal environment for this to pull back. The problem is you can't really stay in that happy median for very long. It's going to tip one way or the other. Either risk dries up or it becomes severe enough that the dollar starts to play a role of safe haven, and it confuses and complicates this pair once again. More interesting for me, if I'm playing risk, is euro yen or pound yen. These are currency pairs that are not as troubled by their roles as safe havens or risky or risk endeavors or carry trade. All right. If there is a true breakdown in risk trends, so if the S&P 500 breaks below 1830 and starts moving on 1800, maybe with ambitions lower, but we won't look out that far just yet, I like the pound yen below 170 or 169. I like the euro yen below 140 or 139.50. All right, these kind of pairs have far more ambition and far more dedication to the risk-on, risk-off theme if we can get it moving. But once again, you can see that the trend lines here too are still standing. You had the volatility, but not the level of volatility, once again, that you had in equities, but it's not making that critical break. Just like the equity markets, the equity indexes have not made their own critical break yet. Now, the only yen cross I currently have is still that CAD yen, the second half of the trade, and it has made its move continuing to the downside. Why is this one more ideal than, let's say, a dollar yen? Well, it's because I'm playing more so a range here, all right, and I'm playing the reversal of an incredibly consistent one-sided market. So this is a better play because it doesn't require as much full-fledged fundamental pressure. This can just trade in relatively mundane conditions, which is why I liked it for what it is. Now, we have a break in risk trends. We start to see the equity indexes clear these more substantial levels. We move up in terms of the risk severity curve. Then I will start looking at these other yen crosses with far greater interest. Now, these are going to be the next step up in the sensitivity to risk trends and very prominent links to that kind of theme. If we get into even more severe risk aversion, which is, I mean, we don't want to hope for things because that's not how trading works, but we should be prepared. If we get into the high level risk aversion, then we can start looking at pairs like pound dollar. Then we can start looking at pairs like euro USD, all right, which is once again moving up with some incredible consistency towards that 140 level. All right, that's when we can start looking further up the sensitivity curve. But in the meantime, we got to look one step ahead, and we have to assess: have we made that step definitively? We've pushed up to risk aversion. We've seen a lot of volatility, but we have not hit full-scale risk aversion enough that we can be confident that it has enough self-generating follow-through. If we see follow-through in the upcoming session, maybe into Monday, then things will look much better. Be ready, though. If risk aversion does kick in, these are great opportunities. The dollar yen is certainly there technically, but I'd prefer the euro yen and pound yen in that kind of move. And if risk trends hold and stabilize, there are some recently weakened yen crosses that may be bouncing off some long-term trend lines. So keep that in mind. Some interesting things happening, and I know that a lot of more traders are going to be coming back to their trade stations, turning them back on, putting up some potential trades or trade setups. But remember, think it through before you put that trade on. Good luck trading out there, guys, and we'll do our weekend strategy video tomorrow.